Hello everyone, welcome back to Just Invest Today. It's getting worse for Alibaba. It's down 12% in the last 5 days. We have the US government coming out and saying it might ban Alibaba Cloud. But does that really matter? Alibaba Cloud is not in the US market, but it doesn't matter. The stock is down to $82 now. It's getting out of hand. The Chinese market sell-off is crazy. No one in the US or internationally wants to own any Chinese equities at this point. The uninvestable market coming back up and people are talking about it again. Guys, what do we think about Alibaba right now? We're going to get into it. We're going to get into the valuation of Alibaba. What is Alibaba actually worth when Alibaba splits into 6 parts? And with that 6-part split, it doesn't matter at this time. People do not care about it anymore. That was huge news, but that only ran it up like 5%. That doesn't matter in this market. So we're going to get into the valuation of Alibaba after it's split. Let's get into this video. So Alibaba stock price has been going crazy all last year from May 2022 till now. It went up to $119, then it went back down to $65, went back up to $120, and now it's back to $82. That wild ride is all because of the geopolitical risk that's going on in the world right now. People are afraid of the invasion of China and Taiwan. We have USA banning a lot of semiconductor companies. Now they're planning to ban cloud. And before all of this even happened with Alibaba, we had so much news of the anti-monopoly practices getting laid down by the Chinese government. We had all the delisting risks with the US and with China. Before that, we even had the banned IPO of Ant Group. The $35 billion IPO that was coming to market was banned by the Chinese government because they didn't like what it was doing. So all of that through the end of 2020 to now has been cratering the stock price. It's all cumulative. That's why the sell-off of Chinese equities is at an all-time high. No one wants to even touch China. We just had Warren Buffett selling TSM because he's afraid of China. We even had Mohnish Pabrai talking about the same risk factors when it comes to China. They just don't know what's going to really happen in that market, so they're kind of avoiding it. So that's what's going on with China right now. Even with all this news, we still have the GDP of China actually growing 4 to 5%, and they're expecting that to climb. We have the Chinese government easing up its regulations on a lot of technology companies. They even came to market and said they're going to reduce the fines on Ant Group. We see them looking at technology companies to lead the way for the future growth of China now. So they're kind of reversing their stance, but people don't care about that. We even have Alibaba splitting up into 6 companies. They wouldn't do that if they knew they couldn't IPO. So that means they probably got the green light from the government. This is all bringing out the true valuation of Alibaba. They even have 25% of their market cap in just cash. That's not even including the investments they have in multiple companies. They have investments probably in like the $80-90 billion range. So that's not even including that. What this Yahoo article talks about, what the true valuation of Alibaba if they split up right now. Right now, we know for Alibaba, they're going to split up into 6 different segments. So the 6 segments are going to be broken up into Chinese commerce, Taobao and Tmall, their core e-commerce businesses, local service group, Alibaba's food delivery, LME mapping, Alibaba Cloud and artificial intelligence, Xiao Now, the logistics services, global digital commerce group, international e-commerce. We have Lazada and we have Trendyol. We have digital media entertainment group, Alibaba's movies and streaming business. I'm actually very excited about this split because we have Xiao Now, the logistics service, growing 20% plus for the quarter. That's a crazy amount of growth, and we can kind of see that expanding into the future. We have the Ali Cloud segment, which is the true multiplier for Alibaba growing into future, in my opinion, as the cloud segment is so small compared to the US segment right now, and we still have Alibaba Cloud dominating like 35% of the market. So if they can continue that dominance, we can see Alibaba Cloud becoming huge in the cloud market in China right now. If it goes back to 10 to 15% growth rates, we have the international business growing 20 to 30%. Lazada in Southeast Asia, we have Trendyol in Turkey growing crazy. So guys, that is super huge for the international commerce. I would love to own those companies long term. Those segments are going to be huge growth factors for Alibaba moving forward in the next 5 to 10 years. I promise you. The year ended in March 31st, 2022, US China commerce generated $93 billion, international commerce $9.6 billion, Local consumer services, not 6.8 billion. Xiao now 7.2 billion. Cloud 11 billion. Digital media and entertainment 5 billion. And innovation and initiatives $447 million US. Those were the sons of Alibaba's businesses. Now we're going to project the growth rates of those individual companies going forward in the next 12 months. So we can see 2% was the growth rate of the total revenue of Alibaba for Q3 2023. But look at this Chinese commerce. Chinese commerce was down 1% year over year. Cloud was 3% for Q3 2023. International commerce 18%. Local consumer services 6%. Now 27% growth. Digital media minus 6%. Innovation down 20%. So this is the projections that this guy has. 8% total revenue for 2023. I think that's very reasonable. China commerce 5% reasonable. The growth rate of the Chinese GDP is growing around 4 to 5%, and that's projected to grow even higher. So 5% overall I can see happening. Cloud 6%. Last year it was 3%. I can see happening. International commerce probably staying around that 18-19%. Local consumer services 8%. Xiao now 28%. And the same growth rates for digital media and innovation. If we add those growth rates to the revenue that was generated, we get $152 billion for total revenue. Chinese commerce, $103 billion. Cloud, $12 billion. International commerce, $12 billion. Local consumer services, $8 billion. Xiao now, $10 billion. Digital media, $4 billion. If we add a sales multiple of each individual company, we're gonna add a 3.3 sales multiple, which is very low in my opinion, to the Taobao and Tmall section. We get $342. Cloud a 6 multiple, which is kind of low in my opinion. Again, $73 total. We add a sales multiple of 3 of the international commerce, $36. Local consumer services, $24. Xiao logistics, $42. Digital media, $8. And innovation, $0.94. So if we add all of those up, we get a $530 billion market cap for Alibaba. That's a $204 stock price. And right now it's trading at $82. So we can see the huge undervaluation of Alibaba right now. That might even get bigger because we've seen Alibaba trade at $65 just recently. So don't discount that this valuation can go even lower. But even if it goes lower, it doesn't matter because we understand the true intrinsic value of Alibaba post-split. And that's going to continue to grow. As I said, this was only 1 year. So what happens in the next 2 years, 3 years, 4, 5, 6, 7, 8, 9, 10? When Alibaba's businesses get better, they grow faster. Because remember, Alibaba was doing 20%, 15% growth not that long ago. So who knows what it can do into the future? I think this business is in for the long haul overall. So guys, tell me what you think about this video, the true valuation of Alibaba post-split. Guys, leave a like and comment down below. Subscribe to my channel. Peace.